What is the most important aspect of overall portfolio return? It's asset allocation. It contributes to the tune of 91.5% of total portfolio returns, while selection, timing and other parameter is totally contributing only 8% of the portfolio returns. To ensure right asset allocation, one must buy low and sell high. But most investors do exactly the opposite due to fear and greed. What are the other practical problems with the theory of buying low and selling high? How to decide valuations? How to take care of any short-term capital gain taxes? How to avoid fear and greed? Solution to all these problems is ICICI Prudential Asset Allocator Fund. It is a fund which essentially allocates your money between equity and debt. The fund uses in-house equity valuation index model to decide how much percentage of portfolio should be invested in equity and how much in debt. The fund can allocate up to 100% in equity funds in extremely undervalued markets, while it can invest in 100% in debt funds in extremely overvalued markets. Back taxing results from March 2010 show that the set asset allocation model would have outperformed the Nifty 50 TRI with much lesser volatility and lower equity exposure. Let's see how. When market was down, the allocation to the equity was increased, and when markets were high, the equity allocation was reduced by the model and thus generated alpha. Let's look at the performance in various market cycles. The model has limited the downside in falling markets. In bull market, the fund has participated in the market rallies. Even when the market has delivered a flat return or zero return, the model has delivered decent positive returns. Let's check the consistency of returns. For any 5 years period, model's average rolling return is higher than average rolling return of Sensex, and minimum return for any 5 years period have been close to 11%. ICICI Prudential Asset Allocator Fund is a relative valuation-based asset allocation fund, predominantly investing between equity and debt, and tactfully it may invest in gold. It tries to optimize the returns while reducing the volatility of returns, and most important, it keeps emotions of greed and fear out of the investment process by following simple and scientific investment process based on valuation. To enjoy the journey of hassle-free wealth creation, invest in ICICI Prudential Asset Allocator Fund. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.